Howdy, everybody. Thank you for joining us today on this podcast. Today, we're talking about something that every homeowner, investor, and future property owner is going to want to talk about, property taxes. And joining us today is Craig Hancock, property tax specialist. Is that your official title?
Unofficial.
Unofficial. Okay. And tell me a little bit, Craig, about your experience with property taxes.
Yeah, so I've been in and around the real estate business for, 12 or 13 years now, but almost exclusively from a data technology standpoint. And around 2020, started getting involved in the property tax business. And I love big data problems, and this is a big data problem to solve.
Why was it a big data problem?
Because not just to understand property taxes, but to fight property taxes or appeal or protest your taxes, you have to be able to consume and process and synthesize a tremendous amount of data to actually have the best case that you can find. And doing that takes a lot of computers and a lot of algorithms, and it's been really, really fun to build all that stuff.
So today you actively help consumers, property owners fight their taxes.
We do. We work with a ton of different tax agents across the state of Texas as well. So we've built a lot of the technology and the data systems and everything that goes into running a tax firm, being in the property tax business, protesting property taxes on behalf of property owners. And so we have a very multifaceted business approach when it comes to
and
that.
I wanted to make sure our listeners knew who we had when we were asking these questions. And so we're going to talk in a second about protesting, but let's start first with how are they calculated? Is it a easy algorithm? Is there a method to the madness? How would you explain the way our property taxes are calculated?
Yeah, so there's an easy layer of calculation.
Okay.
And then below the surface, it's very complex. So the easy layer of calculation is your home's value determined by the county multiplied by your tax rate. And that result is your annual tax bill.
Okay, work me through that again. This is the easy one, and I'm already lost. Okay, so then work me through that one again. It is our home value.
Home value, yep.
Which is calculated how?
Well, so that's it's determined by your market value. So the county has to, every year the county by law has to figure out what they think your market value is. And so if your market value is $500,000, then they would publish that and say that this is how we're going to calculate your taxes based on a $500,000 value.
Because there are technically two moving parts. There is the appraisal and then the assessor, which I think everyone always gets mad at the appraiser saying, hey, you made my taxes super high. And I think, so when we talk about how our taxes are calculated, it's both of those two entities. So just breaking down the appraisal, how would you explain the appraisal part of how we get to the appraisal?
Yeah. So it's actually three.
Oh, there's three. Okay.
There's three participants. Don't leave the taxing entities out of the mix. Yep.
Yeah.
So the school districts and police and fire and county and flood and all that stuff.
So we'll work through the first one, then the appraiser.
The appraiser.
Yes.
The appraiser is responsible for providing only one thing to the equation, which is that value for your home. Now, how they do that is with a lot of data and a lot of their own algorithms that are called mass appraisal systems. And they crunch out a number for every property in the county every single year. And so how they arrive at that value, that's one area of complexity, but they can take a couple of approaches. All the approaches have to stick within kind of normal appraisal methodology standards as written in the code. But that's what they do. That's the only thing that they actually do is come up with a number.
So our realtor members are used to getting an appraiser to come out to the property.
Yes.
Exact same thing?
No.
Okay.
And this is potentially like the most mind-bending, confusing part of property taxes.
And I'm not offending anybody.
Nope.
There is, it's a different, okay, keep going.
It is. And so digging into this, what I've found that is really kind of perplexing, there are 10 different values for your home that are all different and they're all correct.
Depending on what you're doing and looking for.
Depending on what the value, how the value is being generated and what the value is used for. So just to throw out a couple of examples, there's the one that real estate professionals, particularly agents, use all the time is like, what's the market value? What's the market value? What's the market value? What can I buy this home for? What can I sell this home for? Well, and that's just one of the 10 values. So there's also insurance value. Insurance companies can produce their own value for a home in their own way, with their own data, with their own methodology for a whole different use case. There's replacement value, right? And then in our world, there are actually 4 different values for a home that are all related to property taxes. And then even the lenders have their own valuation methodology and approaches, and they use that resulting value for specific things to make a lending decision. And so any given home can have 10 different values, and they can all be different, and they can all be correct. Now, they're all going to be within a tight range, but they're all going to be different. And that's a pretty confusing fact about real estate that a lot of people that don't dive in, particularly the property tax world, that they miss.
So I think when I first bought my first home a long time ago, I remember the first thing I did was like, well, I'm going to go to Bexar County appraisal and find out how much I should make an offer on that house. And that's where the realtor said, actually, that's just one element. There's a couple of things, which I think is what you're saying. Now, My question is, would the tax appraiser want to be is trying to get as close to that market value as possible, because by statute they're required to be as close to market value as possible.
That's correct.
Right?
Yep.
Even though they're all different, the tax appraiser's trying to get to that one exact number that this house would sell for.
That's correct. And so a real estate agent trying to sell a home on behalf for a client would want to basically try to get to the same thing, but the data that each of them uses to input to the process, the models that they use to determine what the ultimate value should be are completely different. And so they might be striving for the same sort of outcome, but they will get different results, almost guaranteed.
Okay.
Because they're using different data and different algorithms or models to derive their view of defining what value is.
Okay. Yeah. So I think I said tax appraiser and then I said tax assessor, but you brought up the third, which I think we should go there first.
Yeah.
Because there are the taxing entities that actually create the rates.
That's correct.
And so those are the school district, county, city. Who am I missing?
Fire, sometimes police. Okay. Some counties have mud districts, water. Sometimes there's special tax rates in certain counties.
And each one of those government entities then comes up with its own, this is the tax rate that I'm going to assess against anyone who's within my area.
Yes. And they typically get to the rate by developing a budget first. And the budget tells them, well, here's what we need this year to operate this entity, whether it's a police force, whether it's a school. Here's the budget. Here's what we need. So, okay, if we tax everybody to get to this budget, what's the number? How much do we have to tax every property owner in order to get to our budget? And that's how they arrive at whatever the rate is.
Okay. So I am a school district, and I said, I've come up with my budget. Here's my rate. I've left it the same. I then submit that to the tax assessor. Correct?
Correct. And so this is, let's jump over to that, because the tax assessor, the way I like to think about it, that the tax assessor lives in between the appraiser and the taxing entities. So when the appraiser finishes appraising, they throw that number for every property over to the assessor. Mm-hmm. So now the assessor has the number. They still can't calculate your taxes until they have the rates. So then they wait for the taxing entities to develop their budgets. Sometimes it requires voter approval. Get the budgets, get everything finalized, and determine what their final rate is. That often happens in the month of October every year. And then once the taxing entities have their final rates, they throw their rates over to the assessor. And now the assessor has the value from the appraiser and the rates from the entities. And now they can actually calculate what your tax bill is. And then they will generate your tax bill and send it to you or your mortgage company.
And the one thing that the tax assessor also does is determine if there are exemptions or other reasons that it will modify the actual tax rate in your tax bill.
Yeah, so exemptions are actually managed by the appraisal district. And because the appraisal district can approve whether or not you get exemptions or not. And so they know what exemptions you have. When they hand over your value to the tax assessor, they also hand over your collection of exemptions. So they manage it, but the tax assessor implements those exemptions into your bill.
And exemptions are over 65, disabled veteran, homeowner, not homeowner, homestead.
Homestead.
Thank you. That's okay. So that is the tax appraiser. I feel like all of us get really mad at the appraiser, but it's really that school district, the city, or the county who makes the decision on how much I'm going to have to pay. Is that fair? Because the tax appraiser is just saying, hey, look, if somebody was going to buy this house, this is how much they would pay. The tax assessor is going to say, the school district, the taxing entities told me this is how much I'm supposed to collect from you. But none of us really focus on the actual jurisdictions that say, this is how much you're going to have to pay based on your house. If your house is worth $200,000, then you need to pay me whatever percent of that.
Right. Yeah. So if we stay at the simple math level, then if your taxes are computed by your value and the rate, and you want your taxes to go down, then you either have to make your value go down or the rates go down. Or both.
I mean, and you're completely out of control of the rates because that's going to be the taxing
entity. Not entirely.
You're going to vote them down?
Yes, you can always. That's true. You can always vote against proposals that the taxing entities put forth, and that happens actually a lot. Okay. The only other way to control or influence your rate is to move to an area that has a lower rate.
This is why some people say, I'm going to live in the county because it's less taxes, because they're not taxed by the city at the same time.
Yep. So
before we get into how you said there's two things. You can either vote down the increases in property taxes or your value. Have we answered that question where we start off, and I was kind of a little lost, is market value versus taxable value? Yeah. That's the difference.
Yes.
That market value is how much somebody's going to pay, but the taxable value is one of those things, like you said, it's correct, but it may not necessarily be the same.
That's right. So of those 10 values for a property, 4 of those 10 values are all dedicated for property taxes. Okay. And one is the market value, like we've talked about. You've brought up the assessed value. Inside the market value, there's actually 2 other values that the appraisal district looks at and uses. One's called the equity value and one's called the sales value. They use those 2 values to determine what the market value should be. And won't go into that unless you want to really
you see I'm like, huh? But okay, keep going. Well, let's see if we have time.
Yeah. So all you need to know about the equity and the sales values for your home is that the appraisal district uses those 2 different values kind of below the scenes, uses those values to try to determine what your market value should be.
Okay.
So they're kind of sub-values to the market value.
Okay, but now I'm just curious because what is the distinction between equitable value, and how would you explain both?
Okay, so sales value is the easiest one because the sales value, the way that the appraisal districts look at sales, is the most similar to what a real estate agent would provide their client in terms of here's what I should pay or sell my home for. So that sales value is most similar to that market value that a real estate agent would be thinking about.
Okay.
The equity value is a requirement in the law that the appraisal districts make sure that every property is appraised in an equal and uniform manner. So they have actually 2 mandates, and sometimes these 2 mandates can fight against each other a little bit in the appraisal district, and this is why their job is not that easy. They have a sales mandate to be as close to market as they can get. The equity mandate requires them to make sure that they appraise each property in an equal and uniform manner to all of its other comps, all of its other similar properties. So they have to do both. So they produce both of these sales, the sales document and value and the equity document and value. And when they look at both of those, then that's how they determine what the ultimate appraised value is for the home.
Okay, we're going to come back to equity because I think that's what I've been using, even though I couldn't explain it, when I go and protest my taxes. And then for all of our realtors who are out there who are saying, Gilbert, how do you not know any of this? Please remember, I am not a licensed real estate agent, so I need this advice just as everyone else is a homeowner. Yeah. But have we covered pretty much most of the most common misunderstandings of the 3 three-legged stool, if you will? Or is there any that you think, you know what, I wish consumers or real estate agents would know about this one?
Yeah, so really a lot of the misconceptions are tied up in this value conversation. And again, just realizing that the market value that a real estate agent thinks about is actually different than the sales value that a county thinks about. They're very similar, but they're constructed differently and they're used differently. And that market value that a real estate agent thinks about when it's similar to the sales value is just one component of what the county looks at to determine your what I'd like to call it the tax appraised value, because they're appraising the property for the purposes of taxation, not for buying, not for selling, not for replacement, not for insurance, not for mortgage, not for going down the list of all the other reasons to use a value. That is not what that value is designed for.
I see. Yeah. Okay, so it makes it so if you kind of frame the job of the appraisal district for that. It's like it's not supposed to be appraising your value for market. It's supposed to be appraising your value for taxation. That's where you get
that's the use, but the language in the code does require them to get as close to the market
value,
and that's where the contention can lie. Is a homeowner might think that their market is different than what the appraisal district market says, and they might be getting a different market value from the real estate agent.
So let's talk about the contention.
Yeah.
Does anyone go in and say you undervalued my home?
I have not seen that happen.
I didn't think
very
so,
often.
Right? So
yeah.
I just wanted us to start off with that assumption is like, hey, no one comes in like, you need to assess my value.
Now,
$50,000 more, $100,000 more.
Right. But to be candid, there are quite a few people every year that look at their appraised value from the county and realize they undervalued my home. Now, they're not going to go in and talk about it or complain about it, and then they may not want to do anything about it. But
so we're really talking about the people who get their tax bill, and then they see how much their house was appraised at, and they're saying, you know what, my house should not be appraised at that. It should be much less, and let me tell you why. So when we're considering who should consider going through that process?
Everybody.
And when we say everybody, we mean everybody.
Everybody. Yeah.
Who do you think oftentimes doesn't take that advice and says, whatever, I don't need to worry about it?
Yeah, there's really two types of people that don't participate for different reasons. One is they just don't really care or have the time. Doesn't bother them how much they pay in property taxes for whatever reason. Sometimes people just feel great they consider it an investment in their community and their county. And they don't care what the counties charge, and they're going to pay it, and they're going to be a happy citizen. There's those types of people that typically don't participate. And then the larger contingency of folks are just people that aren't paying attention, don't understand that there even is a protest or appeal process, or even if they do, it's a pretty daunting thing to approach when you don't have the data, the knowledge of the system, the relationships with appraisers and so forth. It can be pretty daunting. And so that keeps a lot of people on the sidelines.
Okay. Yeah. What do you think ends up being the one red flag that gets somebody off the sidelines? What is the most common thing that happens that everyone says, like, wait a minute?
Yeah.
I need to go in and talk to somebody about this.
Unfortunately, the biggest catalyst is that tax bill that lands in their mailbox every November, December, or their mortgage going up unexpectedly.
Because the escrow amount went up and they wasn't enough to cover it, and now I got to come up with extra money every month.
Right. But just like we were talking about, by the time you get your tax bill, so many things have already happened that took 9 months to happen. The appraisal district had to appraise your home, and they notified you about it. They had to approve your exemptions. They passed all that over to the tax assessor. All the tax rates had to be generated by the taxing entities based on their budget. So a whole bunch of stuff is happening the whole year. That tax bill that you get is the end result of all of it. And unfortunately, that's the thing that triggers people is they can't believe that they're paying this much in property taxes and they don't understand why.
But you said earlier there's two things you can do, and one of them was to protest or vote down the actual taxing entities increase.
Yes.
But at that point, it's too late.
It is.
For that year.
Yeah.
So the only thing I can essentially use to whatever lever I can pull is simply saying the value that you placed on my home is not what I think it should be.
Correct. Yeah.
Is there ever a point where someone would say it doesn't make sense to protest?
We have a lot of people say that. The people that look at the value that they get from the county and they think for whatever reason that I can sell my home for more than that, so I'm not going to waste my time. I think there are people that come to that conclusion based on their own knowledge of the market or whatever. But you would be shocked at how often that we see reductions in value on properties that the owner thought it was already fairly valued. So again, the owner thinks about value like a real estate agent does. Like, what can I sell my home for? Mm-hmm. But the value that is used to compute property taxes is different. And so you can think that, oh, well, my county value is less than the market. That can be a true statement. It can also be true that county value, which is already less than what you think the market is, can still go lower. Both things can be true. And that can be confusing for folks.
And I think that's where fair and equal comes in to a part, right? So we'll get to that, but walk us through the timeline. What happens when a homeowner receives the notice of the appeal process or the notice of appraised value, and what happens first, and what do you recommend?
So when that letter hits your mailbox, usually every April, you have 30 days to decide whether or not you want to take any action.
Deadline.
Yeah, and so the deadline every year is May 15th.
Okay.
Yeah. Sometimes counties push it back because they're late on some things, but most of the time, it's just best to remember it's May 15th is the deadline. So you only have 30 days to decide. If you forget or ignore it or think you're going to deal with it later or whatever, once you miss that deadline, there is not anything anybody, even a licensed tax professional, can do to help you. You have just given up your right to argue your value for that entire year, and you have to wait till next year to do anything.
And I think what people may be missing is you just have to give notice that you want to do it.
Yep.
And you just have to check, this is what I intend to protest based on.
Right.
I think there's a misconception that I have to have all of my ducks in a row then when I submit that form, because I know I protest every year because the then tax assessor then said, Gilbert, you should protest every year. And I was like, well, if that guy said it, I'm going to do it. Mm-hmm. But I submit it then, and then I can go online and set my appointment for 2 months out to go through my informal hearing. And it's in that 2 months that I have time to talk to someone, get the information I need to prepare myself. So if you get the notice and you're not too sure, you should still submit it, because you can always just withdraw it anyway.
That's right.
Right?
Yeah.
And I think most people think like, oh, if I have to submit this form, then I need to be ready today in order to contest it.
Yeah, there's a lot of clients that say, hey, I want to see what you submitted when you file my protest. And what they're really asking for is they want to understand their case better. They want to understand the data. What did you use to argue it? But you're right. When you submit to file a protest, it's just a checkbox. It's basically like, I want to file. That's it. You don't have to submit all of your evidence or your data or your case. None of that has to be submitted when you file. But you're right. That happens weeks or months later after that May 15th deadline.
I submitted the form that I'm going to do it, and now it's the phase between the form submission and my informal hearing.
Yep.
I'm also presupposing that you do an informal hearing, but what is the recommendation between there?
Yeah, so that's where a homeowner who's protesting themselves has got a pretty big mountain to climb, because to do it right and to do it well, you need to figure out how to go attack the county's sales value and their equity value. Because remember, those are the two values that the county uses to determine your appraised value. So you have to build a case for both. If you want to do this right, you got to build a case for both. Sales value cases are built off of actual sales data.
Okay.
And equity value cases are built off of having all of the county's data. So you have to go get all the county's data, and you have to go get all the sales data, and you got to build both cases. And then once that's done, then you're ready to go to your hearing, because you have one or two different cases that you can make to try to get your value lowered.
Do you make both cases?
That's always what we recommend.
Okay.
But we're coming out of a pretty hot real estate market the past 5 years. And for a couple of years, there were no sales cases to be made on some properties, because the market was so hot that all of the sales from the prior year, it did not help support the idea that your value should be lower. So sometimes you will do all that work and do all that analysis, and the analysis will say you don't actually have a sales case.
Okay. Because the house is valued at $250,000. And the sales protest means, hey, I don't think it could sell for this much. What they're going to say is, let me show you how much everything else sold for in this neighborhood, and it's all at $250,000.
Or higher.
Or higher.
Yeah.
And that's the analysis of, but you have to have the data in order to make that assessment.
That's right. And this is also one of the parts of the process where homeowners and even real estate professionals kind of drop off, is that they think it's only a sales argument. Well, if you go through that process and you realize that you don't have a sales argument, you're not dead in the water if you have somebody helping you do the equity argument. There's still another argument you can make. And so I get really frustrated to hear when either real estate professionals or homeowners look at the sales comps and go, I don't have an argument. I'm not going to protest. They're missing half of the argument that they can make. And so
let's jump in from my own personal experience.
Yeah.
How would you is this sales, which I think it is, or is it the equity? Informal hearing officer, I'd like to show you my fence, which I have learned does not go to the value of the home.
That's correct.
So they immediately kick that out. Note to self. I'd like to show you the cracks on the wall where I have foundation issue. I'd like to show you a copy of or a photo of my bathroom, which hasn't been renovated, but all these other sales comps have, new marble in their house. I'd like to show you that, I have some wood rot here. This is my air conditioner. Here's the bill for the new water heater that I have to pay. Is that sales or is that condition of the home? Like, where does that one fit into?
Boy, that's a great question, Gilbert. So that part of the tax protest model lives in both the sales argument and the equity argument. And let's talk about that. So I'll use a couple of extreme examples to make the point. So you have a home in your neighborhood down the street from you that sells for, if your home's valued at $500,000, let's say the home sells for $700,000. Okay. But if that home has everything done up to the nines, maybe it's even bigger, maybe has an extra bedroom, all of those features.
They replaced all that, the contractor grade carpet with hardwood floors.
Right. All of those features are considered in the property tax valuation process and have to be effectively removed from that $700,000 sales comp in order to be equalized with your home.
Okay.
So that's in the property tax world, that's called the adjustment process. And so you actually have to go adjust every comp to the subject property to actually make them equal. Otherwise, your 3-bedroom home might get compared against a 5-bedroom home, and that's not really fair.
So even though you're like, hey, some people could think they see the sales data and they just move on and say there's nothing. That's another version of sales protest, which is the sales that you're comparing me to, the build outs or the features in those homes are different from mine. Let me make that distinction.
Yes. Okay. And so that adjustment process, here's the really tough part. Especially important for real estate professionals to know this. That adjustment process has to be applied to every one of those features of the home. And so sometimes there are 30, 40, or 50 features that need to be adjusted about a home. And the sales data coming out of MLS systems, although it has the features listed, it doesn't do the adjustments the way the county does it for property tax purposes. So, and that's really important.
Okay. So here's asking hypothetically for somebody completely different. What else are they going to walk into and say, actually, that you said there's a whole bunch of them. Yeah. I learned fence is not one of them, and nor is landscaping.
Right.
Like my entire dead yard does not go to the back. I've learned these because I've gone in there with like, here's a photo. This is why this house isn't going to sell. And they're like, actually, sir, that doesn't apply. What are the other things that most people walk in there and say, well, look, this is why my house is worth less? What, in your experience, what are most people wrong about in that instance?
There's a lot of those things, but you did hit on two big ones. Landscaping and fences are not considered at all in a normal county appraisal process for property tax purposes.
Would you say, though, that those definitely go to market value?
Absolutely.
Right? I think that's the contention. Is like,
it is.
This house isn't going to sell because of the way the front yard looks.
Right. But here's the other ones. It's a lot of the other repairs that need to be made to a home are what the county in the code considers routine maintenance. So you cannot bring anything to your protest that is in the routine maintenance bucket and expect the county to listen. Okay. So routine maintenance. I need my exterior house needs paint, or my floors need to be replaced, or my refrigerator died, or going down the list, all this routine maintenance stuff. None of that's considered. There's only two really big expenses for a home that the county will consider almost every single time. One of them is roofs, because those often cost $20,000 to $60,000, and the other one is foundations.
Okay.
So if you have a roof problem or a foundation problem, then you can get an estimate from a licensed contractor, and you can bring that information into your protest, and the county almost always will consider that, and they will give you a break on your value. But all the other things we talked about, landscaping, fences, my neighbor's trees hanging over into my backyard, or I need paint, or all down the list, none of that matters.
How about the faucets are original and they haven't been upgraded? Yeah, it's not routine maintenance, but I mean, it kind of is.
Yeah, so the way that the county's models treat that stuff and treats routine maintenance is they come up with what they often call a condition score.
Got it. Okay. And so that's what it affects. The condition of the home.
Correct.
Will affect that price.
Yes.
Value.
Yep.
So go ahead.
No,
I was going to say, I'm going to ask you to hold on to this question for you, is how do we use the packet that they give us? But before we get too far off on the equity one that you say we often,
miss.
Don't really take on, what is it that we're missing there?
On the equity side?
Yes.
Okay. So the only difference between the equity argument and the sales argument is the data that goes into it. On the sales argument side, it's because of the name, it kind of makes sense that we are only looking at sales. Well, if your neighborhood has 300 homes in it, then last year, I'm guessing 20 sold, maybe 25. I don't know. It depends on the activity. So when you go develop a sales argument for your protest that year, you can only choose from the 20 homes that sold.
Okay.
On the equity argument, you get to go look at all 300 homes in your neighborhood, because it doesn't matter if they sold or not, because they have a value because the county gave them a value, including your home. So it's a much bigger data set to use and to look at. It's harder to get all of the county data for all of the homes in your neighborhood. And then it's harder to actually coalesce that into an argument for yourself. Because when you're just dealing with 10, 15, or 20 comps, that's kind of somewhat manageable. You still should do the adjustment process we talked about before. But on the equity side, you're dealing with hundreds, in some cases, thousands of homes. And you have to do the adjustment process on that as well in order to put forth a valid argument that the county will accept.
So let me ask if what I have been doing is in fact that, because I don't think it is, but it maybe I've kind of gotten a little short of it.
Yeah.
I will take the packet that they have, and it gives me all the values of everything in my neighborhood. And then I assess every house that looks about the same square footage. And I'm like, hey, my house is valued up here in comparison to everyone else. I don't think that's fair and equitable, and it should be in the middle here because your algorithm, I guess. Is that the same thing, or is it not? Is it?
It is.
It is.
Yeah, so you're starting to dance in the equity argument world.
But I've only done it based on the packet that they've sent me, right? Because they send me, I don't know if anyone else does this, but I'll highlight my house, and I was like, look at all the houses like mine. And after years and years of protesting, I'm pretty much in the middle. So me going in there is a little harder. However, at the very beginning, the house was way valued more than everyone else who had the exact same house in my neighborhood.
Oh, and so you've been doing a good job.
I think so. I mean, I've gotten a lot of advice. Yeah, conversations like this. But is that the same thing? And you said I'm dancing in it. What does that look like at scale?
Yeah. So at scale, to produce an equity argument, comprehensive equity argument, you have to have all of the data for all of the similar homes to yours in your area.
Okay.
And again, that could be hundreds or thousands of homes. Once you have all the data, then the data comes from the county. This is not sales data. This is county data. Once you have all the data, then you need to adjust all of those homes to yours.
Okay.
And then you can pick the best ones closest to your home that might give you a chance. So that's a big data problem. Like to have systems that can do that effectively in order to make that argument is very, very hard.
Yeah, no, it's extremely, I mean, I have a very small data set and it takes a lot of time to get that stuff ready.
Yeah.
Am I missing anything on the protesting? If not, I have a list of questions to ask you to debunk myths, but am I missing anything about the protesting process?
No, only to hit probably the most important part, which you've already said once, I want to hit it again, is protest every year.
Every year?
Every year. There's no downside. There's no risk. They, by law, are not allowed to raise your value. And if you don't protest, you forever miss the chance to handle that year again. You cannot protest that year again if you pass up on it. So protest it every year. And actually, Bexar County's been great at encouraging people to protest.
Yes.
They've been fantastic about it because they know that is the right thing for property owners to do every year.
In fact, they don't call it protest. They call it
appeal.
Right?
Roy mentioned that at a conference recently. I totally agree with him. The word protest is loaded.
Yeah. It makes me feel like I need to be ready for the fight.
Oh, yeah.
And before you answer some of these myths, though, I want to make sure that folks understand there's the informal process, which I think most of us go through, which does not involve a panel with me on one side of the room, someone else on the other side, and then 3 people hearing. The informal process is a Zoom. At least that's the way I've done it.
Yep.
And I'm just talking to someone back and forth and saying, here's what I got.
Yep.
And they just say, okay, well, here's where you're off, right? And it's not intimidating at all, especially the appraiser has made it extremely approachable for everybody.
Yep.
So going down these questions, I think you've answered them. Ready? Like true or false? If you protest, the appraisal district can raise your value even more.
False.
They can.
Cannot. Yes.
And you mentioned it earlier by statute.
Correct. So, now, in that tax year.
In that tax year. Okay.
Yeah.
You drew that distinction on purpose?
Yes.
Okay. Is it only worth protesting if the value is drastically off?
No.
Okay.
It's worth protesting even if you think your value is drastically low. It's worth protesting because you don't really know, again, what the county's sales or equity value process might produce for you. You might be 100% correct that your market value, your real market value is higher than what the county gave you. But again, you can still get it lower. It's harder sometimes, but it's very possible, and it happens a lot more than people think.
I've also learned just being nice to them. They're generally inclined.
Right.
I've also learned that if you set yours at the end of the protesting period, they've been through so much that I feel like they're a little bit more amenable by the time they get to mine. But just leaving that one out there. Don't take all my late protesting time slots now. Does hiring a protest company guarantee a reduction?
It does not.
Okay. Why not?
Because there are inherent truths about a home and its value every year that might make it impossible to get a reduction. So statistically, on average, a professional who is tenured in the business, licensed, has been working with the county, statistically is going to get a better reduction over time than a homeowner that does it by themselves. But if a property is if there's an issue with the property's value, or if there's data that just makes it impossible to get a reduction, then it doesn't matter if you hire a professional or not. You won't get a reduction.
How do you find your professional?
Boy, that's a great question because there's a lot of them out there. Mm-hmm. Instead of a lot of them have websites and so forth, but I would say what to look for when you go looking for a professional is make sure you hire somebody, obviously, that's licensed. You want to try to find out how many years they've actually been working in your county. Relationships, good relationships with the county appraisers matters a lot. Unfortunately, there are professionals out there that treat their job in a very belligerent way, and they try to come in and beat the county up. And we have seen tax agents that are cordial and respectful, but that come armed with tremendous amounts of data that can back up their case. They do way better than the tax agents that appear to be, mean and belligerent. So definitely consider that. So tenure, local, pay very close attention to their pricing of how they charge you as a homeowner. There are quite a few firms out there, unfortunately, that have kind of either hidden fees, or they'll charge for things they shouldn't be charging for, like exemption reductions. Mm-hmm. Exemptions are free. Yeah. They're free. So you hire somebody to help you get one, you really shouldn't have to pay for that. So be careful.
Public forum that you can go and find on your own. Careful
the fine print.
How can our members help homeowners find the professionals or be the professional?
Oh, that's a great question. So your members and real estate professionals in general are absolutely amazing at networking and building out great contacts in their sphere. They need to have more than a couple really respected tax agents, tax firms that they can trust, that they know do a good job, that they know have access to the data that's needed to do a great job on the sales side and the equity side, that they've got great relationships with the county, that they have the technology to bring to bear for the homeowner as they go fight on their behalf.
Okay.
So I think that's make sure you include those folks in your sphere if you're a real estate professional.
Okay. There was 2 more questions. I think we got them. Is the county responsible for your tax bill?
Well, the county, so the county appraiser, no. The county tax assessor, yes.
Got it.
Yeah.
But the one who sets it is the entities, the government entities.
The rate. Yeah, they set the rates.
We now know about the 3 of them, the rates. What is the biggest myth you hear from homeowners?
I think it goes back to the things that they sometimes will bring into a protest to argue about. One interesting twist that I've found after talking to thousands of homeowners over the years I've been in this business is sometimes they like to talk about the paint and the cracks and the landscaping and so forth, because there are cases where homeowners have brought that kind of stuff in and have gotten a reduction. And so they think that that's what actually made them successful at getting the reduction. But what the county appraiser is probably not telling them, just to be polite, is that the county appraiser found a different reason to give them a reduction, and they gave them a reduction that they were happy with. So,
okay.
Yeah.
So chances are I went into one of mine in the past with something that was considered maintenance, which you said, and they were just like, well, he brought this, but I'm going to find this for him. And because they're generally trying to help us.
They really are. And I think that's, in terms of the system, one of the biggest misconceptions homeowners have is that the appraisal district is out to get me. And that could not be further from the truth. We've reverse engineered all their models. We talk to their people all the time. We know what they're doing, how they're doing it. They're not nefarious. They're not trying out to get you. But every reasonable appraisal district appraiser will admit whatever that comes out of their system every year for your home, there's some degree of wrongness to that number. And if you come in and ask them to take another look at it and point some things out, the appraiser might actually find the wrongness and fix it for you.
Yeah.
And again, a lot of the appraisers are getting really cordial when it comes to that. It shouldn't be fearful. You shouldn't be fearful going into that process. It's just ask them to take a look.
Yeah,
and see what they can find.
I 100% want to reiterate what you said, because ever since the prior tax appraiser said you should protest every year, I've never had a bad experience. Yep. It has always been cordial. They've always been trying to help me. They've educated me as like, look, for next year, you don't want to bring this, look for these things. And but I do think that we often go straight after the appraisal district for, look at my taxes. And it couldn't be further from the truth.
Right. And when from a human psychology standpoint, when you go into that kind of conversation with an appraiser, whether it's the formal meeting or the informal or the formal.
Never done the formal, so I can't speak to that one. Yeah, no
fun.
thanks.
When you go into those conversations, from a human psychology standpoint and you are not prepared, or you know you're not prepared, you haven't really worked on both cases, you don't have everything fleshed out, you're going to kind of fall back on your emotions, and you're going to get angry, and it doesn't go well. Yeah. So be prepared, hire somebody that's prepared to bring this data and the cases on your behalf for you so it can be done well.
Excellent. I'm hoping that you said the deadlines again. Notices went out.
Notices will go out in April,
and everyone has until
May 15th every year.
Submit that form, even if you don't plan on doing it, and at least learn more about the process.
Yeah.
All right. Greg, thank you so much for talking to us about this. We look forward to getting more information next year about it.
Great to be here. Thank you, Gilbert.
We hope you enjoyed this conversation and found it helpful, both as homeowners and realtors supporting your clients. If you're interested in property tax support, SABOR members now have access to a new member benefit that includes exclusive discounts on professional property tax protest services. These can also be shared with your clients. To learn more and get started, visit sabor.com/property tax support. Thank you for watching.